All right, welcome to The Explainer. Today we're diving into a tech giant that's making a multi-billion-dollar gamble. It's a move that could either lock in its future for decades, or, well, it could be a disastrous misstep. We are talking about Oracle, and they're going all in on the cloud.
Now, if you just glance at the headlines, things look amazing. I mean, in its latest quarter, Oracle raked in a massive $16.1 billion in revenue. And that's not just a huge number, it's a 14% jump from the year before. That's some seriously strong growth.
But you and I both know that a big headline number hardly ever tells the whole story, right? So what we're going to do is dig right into Oracle's own financial reports. We're going to uncover the high-stakes, multi-billion-dollar strategy that's really driving these results. Okay, let's get into it.
First up, let's talk about that impressive growth. It's absolutely real and it's strong. But, to really understand where Oracle is actually headed, we need to break down where all this new money is coming from.
And when we do that, one thing just becomes crystal clear. A full 50%, half, of Oracle's entire business now comes from just one place, the cloud. So think about that. This isn't just a part of their business anymore. It is their business. Everything else, their traditional software, their hardware, all that stuff, that now makes up the other half.
Okay, so now let's go one level deeper, because this is where things get even more dramatic. See, inside that massive cloud business, there's one specific engine that is just absolutely on fire. It's growing at a rate that is truly staggering. I mean, just look at this acceleration. This chart shows the growth for just their cloud infrastructure business. It was already growing at a blistering 52%. Then it sped up to 55%. And in the very latest quarter, it hit a massive 68% growth rate. That is the hypergrowth engine that's powering the entire company right now.
But here's the twist. While this new cloud business is just exploding, Oracle's traditional legacy business, the one that built the company in the first place, well, it's facing some pretty serious headwinds.
And this slide, wow, this slide really tells the whole story, doesn't it? On one side, you have that explosive 68% growth from new cloud infrastructure, but then you look at the other side, and sales of their traditional on-premise software licenses, they actually fell by 21%. It's a dramatic pivot happening right in front of us. The old is shrinking as the new is taking over.
So that brings up a really important question. How in the world is Oracle fueling this incredible cloud growth? Well, the answer is actually pretty simple, but the scale of it is staggering. They are spending an absolutely enormous amount of money.
Just look at this number. This is what's called capital expenditure, or CapEx. It's the money they spend on physical stuff. And in just the first 6 months of their fiscal year, they've spent $20.5 billion. That is a monumental amount of cash to spend in such a short time.
And to be clear, this isn't money for marketing or salaries. No, this is direct, hard cash being poured into building the physical nuts and bolts of their cloud empire. We're talking data centers, servers, all the infrastructure you need to compete head-on with giants like Amazon's AWS, Microsoft Azure, and Google Cloud. It is a massive, massive bet on the future.
Now, whenever a company spends money this aggressively, it can make their profit numbers look a little complicated. And that's exactly why it's so important to understand the two different ways Oracle talks about its own profitability.
So first, you have the official number. This follows what's called GAAP, Generally Accepted Accounting Principles. The easiest way to think about this is it's the strict official rule book. It's how all public companies in the US have to do their accounting.
And under those official GAAP rules, Oracle's net income was $6.1 billion. But then, they also highlight this other number, a non-GAAP number, and that one is higher at $6.6 billion. So the key is figuring out what's going on in that $500 million gap.
So what are they leaving out to get to that bigger, prettier number? Well, it's a few very large and very real expenses. We're talking about things like stock-based compensation for their employees, which is definitely a real cost, plus big expenses from past acquisitions and company restructuring. These are significant costs that are just, poof, excluded from that non-GAAP number.
Okay, let's move on to the final and I think maybe the most dramatic piece of this whole financial puzzle. We've got to see how this massive spending spree has impacted the single most critical metric for any business, cold hard cash. All right, so let's connect all the dots. We've seen it. Oracle is spending billions and billions on data centers. We've seen that this is fueling incredible cloud growth. But all of this has a profound and direct impact on the company's free cash flow. That's the actual cash left in the bank after all the bills and investments are paid.
And this chart, well, it tells a pretty stunning story.
Just a year ago, Oracle was generating a positive $5.8 billion in free cash. They were making money. But as their spending went through the roof, that number just plummeted, all the way down to a staggering negative $13.2 billion in the last quarter.
So let's be really clear here. This is the crucial point. Oracle is intentionally burning through billions of dollars in cash. This high-stakes gambit for growth is coming at a tremendous short-term cost. Also, they can build out their cloud empire as fast as humanly possible.
And that leaves us with this central question, not just for Oracle, but really for the entire tech industry. They are all in, betting the company's future on winning this cloud war. So will this incredible cash burn actually pay off and lead to market dominance? Or is it possible the gamble will prove to be just too costly? That is the real story behind the numbers.
All right, let's dig into the financials of a true tech titan, Oracle. Now, for years, you knew them as the king of databases, right? But what's happening right now is a massive, incredibly expensive, and honestly, a fascinating transformation.
So let's just get right to the big question on everyone's mind. Is Oracle really a cloud company now? Well, the numbers, they tell a pretty dramatic story of a company completely reinventing itself. We're going to follow the money and see what's really going on.
So here's how we're going to break this down. First, we'll hit the big headline numbers. Then we'll look at the cloud engine that's driving everything. After that, we got to see what's happening to their old school business and, uncover the huge cost of all this growth. And finally, we'll put it all together to figure out what could be next for Oracle. Okay, first up, the headline performance. These are the big, shiny, top-line numbers that Oracle definitely wants you to see. And wow, just look at that. In its most recent quarter, Oracle pulled in a massive $16.1 billion in total revenue. I mean, that is a seriously impressive number for any company on the planet. But here's the thing. It's not just about the sheer size. It's the speed. That revenue? It's a 14% jump from the exact same quarter last year. Now, for a company of Oracle's scale, hitting double-digit growth like that is a huge deal. But it begs the question, where is all that growth actually coming from? And that leads us right to our second section, the cloud growth engine. And let me tell you, this isn't just part of the story. For Oracle right now, this pretty much eyes the story. And here it is. This is a huge milestone. For the very first time, cloud revenue now makes up a full 50% of Oracle's entire business. Remember that transformation we talked about? This is it, right here in black and white. The company has officially hit a tipping point. But we need to dig a little deeper because not all cloud revenue is created equal. So over on the left, you've got cloud applications, things like their ERP software, growing at a really healthy 11%. That's great. But look to the right. Cloud infrastructure is where the absolute explosion is happening, with a staggering 68% year-over-year growth. So the crucial point is this. The whole company's growing at 14%, which is great. But this one specific segment, cloud infrastructure, is growing at 68%. This is the hypergrowth engine that's pulling the entire train forward. This is Oracle taking its shot directly at the big guys, like Amazon Web Services and Microsoft Azure. Okay, but with all this incredible focus on the cloud, what's happening to Oracle's traditional business? The software and hardware that built the company into an empire in the first place. Is it still a stable foundation, or is it turning into a heavy anchor? And well, here's the challenge. The legacy software business, which, by the way, is still a nearly $6 billion a quarter segment, it actually shrank by 3%. On the other hand, their much smaller hardware business saw a modest 7% gain. So it's a real mixed bag. It shows these foundational pillars are, at best, pretty much stagnant. Now, this brings us to a really critical part of the story, the cost of all this growth. That incredible 68% infrastructure growth doesn't just happen for free. To compete in the cloud, you have to build a mind-boggling number of data centers, and that costs serious, serious money. How much money are we talking about? Well, over just the last 4 quarters, Oracle has spent an eye-watering $35.5 billion on capital expenditures. That's the cash they're pouring into buildings, servers, and equipment. It's a total all-in bet on building a world-class cloud network. And that massive spending has a direct, and I mean direct, impact on a key metric that investors watch like a hawk, free cash flow. To put it simply, this is the actual cash a company has left over after it pays all its bills and makes these huge capital investments. It's really a measure of true profitability. And here, Here is the consequence of all that spending. Just 1 year ago, Oracle was generating a really healthy $9.5 billion in free cash flow. But as that spending ramped up, look what happened. That number just plummeted, eventually turning negative. And in this most recent quarter, the company had a negative free cash flow of over $13 billion. They are burning through cash to fund this growth.
Okay, so let's bring this all together. What does this whole financial picture actually tell us about the future of Oracle?
So here's the story in a nutshell. First, that overall revenue growth is definitely strong. But we know now that growth is being powered almost entirely by the hypergrowth in cloud infrastructure. At the same time, their traditional legacy business is a stagnant anchor. And finally, this entire cloud strategy requires that massive spending, which has absolutely torched their free cash flow, sending it deep into the red.
And that really leaves us with the big multi-billion-dollar question. Oracle is, without a doubt, successfully transforming into a cloud company, but it is paying an incredibly steep price to do it. The strategy is working, but with spending this high and cash flow this negative, the real question is, for how long is it sustainable?